Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, so S&P 500, E-mini Futures daily chart, and I sound like a broken record coming on here every day, but you've got a range from 2247 to 2267.5. We traded up to the top end of that range yesterday. We printed in the 69 area, came right back down. So what you can see, I'll zoom this in one. I mean, effectively, it's a holiday trade, but it's a 20 handle range. It's been narrowing. So yesterday we took a look at the top half of the range, couldn't hold it. The 9-day simple moving average, which had been trying to go resistance for a couple days after spending a few days of support, they pushed back to it yesterday, couldn't really hold it in, and we've been trading above it in the overnight session. What's more important, though, is this. Here's your, it establishes weekly pivot about 8:15 a.m. Eastern time yesterday. Bounced off it, touched it. We get into the regular session. They lift it up above 67.5. We do the 69 area. Now, the 69 area has been trouble for the bulls for the last couple of weeks, and so is 73. The bears take advantage. They push it back. They do a lower high at 67, and then they do a very nice little pushback, but all they can do is test weekly pivot, and all weekly pivot does is hold, go support in last night's Globex, and they've been walking it up ever since. Now, as we head into today's trade, you've got a couple of potential things. You've got yet another higher low. You've got here, 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 and here, from where the dip buyers defended it last Thursday. And that would have to produce a higher high. Okay. The alternative is we're not going to get back above 67.5. We're going to top out here in the 67 area. We're going to create a lower high versus the 69.5 print yesterday, and we're going to come back to weekly pivot and potentially go through. If we go through, then you have to deal with 58, 53, 51, and then the range low, which is sitting just underneath this chart at 47. Now, I always talk about door number 3. Door number 3 is we don't do anything at all. And in this kind of week and this time of year, you always have to be cognizant of the potential for door number 3. Door number 3 is we trade between 67 and 60 again and just kind of hang out all day and chop around. And people overtrade and they make their brokers rich, and don't do that. It either wants to go somewhere or it doesn't. If it doesn't want to go anywhere, don't mess with it. It's completely unnecessary. January is but a few days away, and in the next week or 2 weeks, you're going to have all the volatility that you need during the course of a day to make your handles and move on to the next day. So be aware that the market may not want to do anything at all. For a quote-unquote holiday tape, it's behaving fairly well. It went from 60 to 69 and back to 60, but moves are playing out very, very slowly. Be self-aware enough to say, I either have the patience for this or I don't have the patience for this. If you don't have the patience for this, then don't trade it, because it's going to take a long time to get paid on any move. A move that would pay you in 30 minutes on a normal day is going to take anywhere from an hour and a half to 3 hours to pay you. And that's excruciating. So, and a lot of traders can't do that. So if you can't, recognize it, take a break, get organized for next year, and come on back. It's the patience thing that kills people in holiday tapes. All right, that's all I got. Everybody have a fantastic day.
Follow us on Twitter at Princetontrader. Come check out our website, Princetontrader.com, and come take a free trial in our chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.